We are going to the industry-focused mailbag today for this episode. So this discussion is actually long overdue.
Do we have a graphic for that? Like where like a mailbag comes across the screen?
I wish. I'll look into that with our producers. But one of our listeners, Matt, he reached out to us over the summer, actually, asking about Nintendo. We did not forget you, Maddie. But the last time Nintendo came up on the show, it was a really brief update on the strong early reception and sales performance for the company's latest console, the Switch. So this was maybe spring of 2017. So Matt's write-up to us, it's a little bit too long to quote here on the show in its entirety, but basically he wanted to know why video game competitors like Activision Blizzard, Take-Two Interactive, and Electronic Arts, they typically get the most attention in terms of the gaming and esports companies, even though Nintendo has plenty of its own strengths, which we'll get into. So Matt, we're going to look at Nintendo's business, some of the latest developments, but to start, it's worth noting that Nintendo is a Japanese company. They're headquartered in Kyoto, and the stock trades on exchanges in Tokyo and Osaka. So for most listeners on this show, those of us based in the US, if you prefer to avoid trading on foreign exchanges, which is possible, but I think daunting to most every individual investors, you'll have to rely on the American Depositary Receipts, or ADRs. So for Nintendo, those ADRs go by the tickers NTDOY and NTDOF. That first one, NTDOY, sees significantly more trading volume, with hundreds of thousands of shares changing hands most days, and 8 of those ADRs represent one ordinary share of Nintendo stock on its home exchange. So going back to Matt's question, a big reason I think why you don't see Nintendo included in as many of these stock recommendations for video game exposure is the fact that I think a lot of investors feel uncomfortable trading pink sheet or over-the-counter ADRs like these shares, but Nintendo is not required to report the full detailed financial and business information to the Securities and Exchange Commission as a result. So while I can go to SEC's Edgar search tool and pull up the Activision Electronic Arts 10K or 10Q filings, that's not the case for Nintendo, though they do offer a lot of pretty solid reporting on their investor relations
There's
website.
also no earnings call, so you sort of lose a lot of the color that you get from questions. So you get the straight reporting, the top sales, the titles, the year over year, but you don't get sort of the like, what are your plans? Are you thinking about making a Super Mario Brothers movie again? So some things that might get them news stories in a traditional cycle on another company don't come up for Nintendo.
Yep. And as you can imagine, that lack of reporting, it's going to give a lot of individual investors some second thoughts before they take a position. But this is a pretty storied, $40+ billion company. I do think that it does deserve more investor attention. And I think that's why we'll get into the company, its business, and the rest of the discussion, because they're enjoying quite the tailwind right now.